Welcome back to Crypto Atlas, your daily source for crypto whale alerts, crypto market moves, and DeFi gems. And Ethereum whales, they're on the move today, not just casually moving coins around. We're talking about a massive coordinated operation. Over 68,000 Ethereum just with these whales that I'm going to be talking about. That's worth around $228 million. Just flowed into the Beacon Depositor in a matter of minutes. On top of that, Bitmine and Tom Lee are both reportedly buying huge amounts of Ethereum. Charles Schwab has announced its plans to launch crypto trading in 2026, and the FOMC just confirmed that a December rate cut is basically locked in. It's one of those mornings where everything lines up: on-chain activity, macro news, and institutional positioning, and it's all pointing in one direction. Okay, so let's talk numbers first because these transactions are wild. At 10:02 a.m., 16,200 Ethereum. That's roughly $53.8 million. Moved from an unknown wallet into the Beacon Depositor. Just 4 minutes later, another 16,200 Ethereum followed. Then, at 10:09 a.m., a third transaction hit the chain, that time with 18,000 Ethereum. And then again, at 10:12 a.m., another 18,000 Ethereum. So in less than 15 minutes, whales sent over 68,000 Ethereum to the same Kiln Batch deposit contract address. Now, that contract is important. It's known for being used by institutions and custodians to stake large amounts of Ethereum efficiently. So when you see these perfectly timed, perfectly sized transactions hitting back to back, it's not random. It's structured, automated, the kind of activity you'd expect from fund managers or custodial firms, not retail traders. What makes this even more interesting is that none of these transfers came from centralized exchanges like Binance, Coinbase, or Kraken. They all originated from unknown wallets, most likely cold storage or over-the-counter holdings. That means these are private, pre-acquired Ethereum bags that are being put to work. So in short, big players are taking their Ethereum off the sidelines and locking it up for staking. So a big question is, why now? Why suddenly stake this much Ethereum? First, this looks like institutional accumulation ahead of a bullish cycle. When you stake, you're locking your Ethereum. You're not planning to sell it soon. You're planning to hold and earn yield while waiting for appreciation. That's the classic smart money move before an uptrend. If whales thought Ethereum was about to drop, they'd be sending to exchanges, not staking. Second, this could be corporate validator setup. Multiple institutions batching their staking through Kiln or similar platforms. The equal transaction sizes are a giveaway. It's like they're dividing a giant pool of Ethereum into clear validator batches. Third, this could tie into custodial and ETF preparation. There's growing speculation that Ethereum ETFs are on the horizon for next year. If that's the case, custodians might be repositioning their Ethereum to optimize yield and compliance setups in advance. The timing fits perfectly, especially with the broader market preparing for more liquidity after the rate cut. I'll talk a little bit more, some other major news in just a moment. I do have a referral link for a crypto exchange called BTCC. You can find that down in the description below. They've been around for 13 years. You get up to 500x leverage. There's sign-up bonuses that goes up to $10,055. If you want to look into that more, if you want to get started, you can find that in the description. Also, you can join my Telegram group if you want to stay updated on the latest. You can go ahead and find that down in the description too. And by the way, Telegram group's free. Okay, so adding fuel to this theory, Ted Pillows over on Twitter reported that Bitmine just purchased about $139.6 million in Ethereum today. And Tom Lee, who's been openly bullish on Ethereum for months, is still buying. When you line up those public buys with the whale movements on chain, the dots connect beautifully. The deposit started just hours after the Bitmine and Tom Lee reports went live. It looks like those purchases weren't just sitting idle, they went straight into staking. If you're new to staking, here's why that's big. When institutions stake Ethereum, they're signaling conviction. It's not a speculative day trade. It's a let's park millions here and let it compound play. That's long-term bullish confidence. It's the opposite of panic selling. It's conviction buying. Then there's the macro headline of the day. Charles Schwab, the financial giant managing over $11.6 trillion in assets, has confirmed plans to offer crypto trading in 2026. That's absolutely massive for mainstream adoption. We're not talking about a small exchange or a fintech startup. This is one of the most trusted names in finance, used by millions of retirees and investors worldwide. Now, think about what that means. When Schwab integrates crypto trading, it brings legitimacy and easy access to a massive pool of traditional investors. Even if the launch is a year away, it sends a clear message. The biggest institutions in the world are preparing for a long-term crypto future. And with Schwab's announcement hitting the same day as these massive Ethereum staking moves, that's not coincidence, it's coordination. These whales could be front-running the coming wave of new institutional exposure. Now, let's shift to the macroeconomic side. According to Weimar X, 11 out of 12 FOMC members have voted in favor of a 25 basis point rate cut in December. That's a near certainty at this point, and for risk assets, crypto especially, that's a major tailwind. When interest rates drop, traditional yields fall. Investors start looking for alternative sources of return, and that's where crypto staking shines. Ethereum, being the largest yield-bearing layer 1, becomes even more attractive to both institutions and retail investors. It's like the stars are aligning. Macro conditions are easing, institutions accumulating, and whales staking all at once. The smart money is locking in now to maximize staking yields ahead of that macro shift. The psychology behind it is simple. When cash becomes cheaper, liquidity flows into assets that can generate real return. Ethereum staking is one of the few places you can get that yield natively on-chain without intermediaries. And just taking a quick look here on the price chart for Ethereum, you guys can see that we did close out green yesterday, but we are seeing a little bit of a drop here today, down 3.26%. Overall, the market bleeding a bit more. So keep an eye on this, and I'll keep you guys updated. If you haven't already, make sure you hit subscribe. I really do appreciate you guys tuning in. You can find me over on Blue Sky at Crypto Atlas. And thank you to my Patreon supporters and my YouTube members. God bless, and we'll see you guys in the next episode.